No rate cuts for variable mortgages. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because we're going to talk about the huge cut to the cash rate. You know, that 15 basis points that has the cash rate down at 0.1%? And how the banks, well, they've passed it on to everyone, unless you have a variable mortgage, pretty much. Let's have a look at this article from the Australian Business Review. Now, I was hoping for my tiny mortgage savings, because every dollar I don't pay on my mortgage is, and I know you're all laughing at it, but you know, $30 a month, that's 30 extra 7-Eleven coffees. Hashtag not sponsored, but I bloody well wish I would. So, CBA, Westpac, NAB, and ANZ will not pass on variable rate cuts to mortgage customers. Are you disappointed, everyone? Are you surprised? The major banks have piled onto the same strategy of not passing on an official rate cut to the majority of home loan borrowers, instead reducing fixed rate mortgage pricing and taking some of those loans below 2% for the first time. ANZ was the last of the major banks to join the well-trodden path through Wednesday of holding variable mortgage rates steady despite a 15 basis point cut in the cash rate by the RBA a day earlier. With official rates not far off zero at 0.1%, the banks argue the hit to profit margins is too great to cut variable rates, given they are unable to reduce deposit rates much further. The counter-argument is that they have access to cheaper funding via the RBA's term funding facility. Yeah, it seems like a joke, doesn't it? You know. Following the RBA's decision to cut the cash rate to a record low on Tuesday, Commonwealth Bank was the first among its peers to announce on Wednesday the lower pricing, cutting 4-year fixed rates on owner-occupier loans by 100 basis points to 1.99%. Under 2%. Everyone. So there's the SVR and there's the 4 years. Now, why wouldn't you just go to a 4-year or to a fixed mortgage? Well, maybe you maybe you think interest rates are going to hit negative. Or maybe you want to pay off more than you can, the extra payments on a 4-year, on a fixed mortgage. There's certain, decisions behind that. And you wouldn't want to have locked in at a fixed rate when it's 4%, particularly now if it's down at under 2%. The reduction marks the bank's lowest advertised mortgage rate and comes as more borrowers take up fixed home loans due to record low official interest rates, which will remain close to zero for at least 3 years. The majority of existing mortgages across the banking system, or 70 to 80%, are, however, in variable rate products. Now, let me know, guys, in the comments, do you have a fixed or a variable mortgage? I've got a variable one, but that's because we wanted to, just decimate it. And I'm tempted to maybe do a split one. Just chuck half of it on there if I can still pay off as much as I want on the other half. Get the best of both worlds. We'll have to see. Let me know what you've done. Because I know our neighbor was quite annoyed. She had quite high rates and she was just waiting for it to tick over so she could get a lower rate. So, in its financial results for 2020 financial year, CBA reported variable rate mortgages accounted for 77% of home loan lending. Westpac, National Australia Bank and ANZ followed CBA's lead on Wednesday, leaving their variable home loan rate unchanged, but cutting fixed home loan interest rates as well as pricing on loans for small businesses. Well, that should be a good support for small businesses that are probably struggling right now. The changes see some big banks fixed rates fall below 2%, and Westpac offering the lowest fixed rate in the market at 1.89% for a 4-year fixed mortgage with a deposit of at least 30%, according to Rate City. CBA's reductions include a 15 basis point cut to 2.14% on 2- and 3-year fixed-rate home loans for owner-occupiers paying principal and interest in the wealth package, and a decline of 51 basis points to 3.99% on unsecured business loan rates through the government's SME loan guarantee scheme. CBA's retail banking chief Angus Sullivan highlighted the bank was still managing COVID-19 repayment pauses and had vowed not to repossess the homes of borrowers that were on time with their payments prior to the pandemic if they were unable to restart after March. CBA's pledge runs until at least September 2021. Westpac reduced a string of fixed-rate mortgage rates and said new small business customers on the government's coronavirus SME loan scheme could receive a fixed interest rate of 2.38% for terms of 3 to 5 years. We recognise it has been a tough time for many Australian households, and these changes mean that customers will be able to access even lower interest rates on our home loan and small business loans, said Westpac's Consumer Division Acting Chief Executive Richard Burton. However, we are in an extraordinary period where the official cash rate at a historic low and unconventional monetary policy measures in place. It is critical we carefully manage interest rate charges. Well, don't worry, guys. When they bring in the central bank digital currencies, we can just have accounts directly with the central bank, and we won't need any of these other little banks in between. Imagine that, getting money at 0.1% interest. Wouldn't that be fantastic? I'm sure that couldn't have terrifying consequences. But big banks have shrugged off calls by the RBA Governor and Treasurer Josh Frydenberg on Tuesday, urging them to pass on the RBA's record-setting rate cut. A handful of small non-bank lenders did announce reductions to their variable rates on the afternoon of the central bank's announcement. I mean, there you go. So I'll have to update my chart because you can see it from this huge 6%. Remember when 3% was an emergency cut? See, this is what happened when they tried to normalize rates, guys, after the GFC. Boom! Do you think it's ever going to shoot back up again? Do you think it's even possible? I would expect and hope that these interest rate reductions get passed through to all borrowers, RBA Governor Philip Lowe said on Tuesday. I think the best outcome would be for standard variable rates to be lower, but if that doesn't occur, I'm confident that they will be passed through, occurring through renegotiation and switching. NAB said its 4-year fixed rate home loan would be cut 81 basis points to 1.98% per annum, effective from November 10. NAB, Australia's biggest business bank, will also cut 200 basis points from the rates on its unsecured quick biz loan for the next 3 months. Oh, 3 months. It's a help, but it's nothing, seriously. ANZ is decreasing its fixed home loan rates across 1 to 5 year terms by between 0.2 and 0.4% for owner-occupier customers paying principal and interest. The company also made a price reduction for loans under the government's SME scheme. Rate City Research Director Sally Tyndall said many of CBA's variable customers would be disappointed by the bank's decision not to pass on the RBA's rate cut. Yes, I'm disappointed. I wanted those coffees, guys. I wanted those extra coffees every month. I mean, every $5 helps. It adds up. Don't look a gift horse in the mouth. So I'll be ringing up my bank and trying to negotiate a better deal. A lot of people who don't want to fix their home loan don't like that it is less flexible and may not want to keep their home for 4 years, she said. But Ms. Tyndall did acknowledge fixed home loans were growing in popularity. CBA data showed 40% of new home loans are fixed, she said. The home loan market was that traditionally customers opted for a variable, which is changing, but there are still hundreds of thousands of mortgage owners on a variable rate. NAB Personal Banking Executive Rachel Slade said, "These changes are designed to provide certainty to our customers with our lowest fixed rate ever, boost confidence and support credit recovery. This is the 6th reduction in the cash rate during the past 18 months. With interest rates at record lows, we're doing what we can to support home buyers and business owners through the COVID-19 period, while also balancing the impact on our deposit and savings customers." I mean, come on. Deposit and savings is not the source of a lot of the bank's funds. They can get it all from the RBA, but still, you got to keep them all happy. So what do you think, everyone? What do you think? Not passing on the cuts to the majority of mortgages. Let me know your thoughts and opinions in the comments down below. Are you surprised? Are you disappointed? Are you looking forward to those 7-Eleven coffees? As always, if you're a fan of the channel and want to support the content I go through and cover, there's a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.